So let's dive into it. Ariel, do you want to start off with a little intro?
Am I? Oh, goodness. Okay, I wasn't expecting that. I thought you were going first.
No.
We just switched, just for you.
Right. Hi, everyone. For those of you who don't know me, I'm Ariel White-Tzimikalis. I'm a partner at a law firm called Goodwin, Proctor. We're the ones who are hosting the drinks on the roof terrace, so do join us afterwards. But we focus on tech and healthcare exclusively, and we advise startups and investors into startups, scale-ups, and are kind of with you on the journey as you scale. I lead the capital markets practice here in London, and I focus on taking tech and healthcare companies public, and I lead our efforts on the Africa practice as well.
And just before you stop, you've done quite a few deals in Africa, right?
I have, yes. So recently just acted for Helios Investment Partners on an investment into a Nigerian fintech. We act for Novastar and Norskin 22 as well on the investor side, and on the company side we act for Move, Flutterwave, and Remedial Health are some of our companies. And
you were there earlier this year?
Yes, we did ATS in Nairobi. Thank you very much. It's going to draw more out of me. I was in Cairo recently, where we, again, as a working group, we're presenting to some founders on exits and accessing liquidity in today's markets, and did ATS Nairobi as well. But I'm regularly on the continent and love being there.
Not just a random lawyer. We vet the lawyers hard. Thank you, Ariel. Freda.
Hi, yeah, I'm good.
You ready?
I'm glad Ariel went first. My name is Freda Isingoma. I'm head of AIM VCTs at Octopus Investments. Some of you might know Octopus mainly through energy, but it actually started off as an investment company 25 years ago, and Octopus Energy was one of our startups, which is now the biggest energy provider in the UK. We run about 13 billion assets under management. That's split between private VCs, public VCs, which is the one I head up, as well as real estate. And then we have some other portfolios that are more towards the inheritance tax side. So I started my career in broking for my sins, and then moved over into investment management in 2000. So
she's not old enough, right?
Yeah.
The math does seem to quite add up for me. I always wonder myself.
So I've been doing it a long time. I've known AIM literally the whole time. I did take a little bit of a sabbatical to move to South Africa to run the African equity portfolio at Investec, and then became an entrepreneur. So I identify with a lot of the sentiments and feelings of running a business in Africa. So we run the money. We're an AIM-focused team. Octopus are the biggest investors in AIM. So we're very AIM-focused. Some of my colleagues have been literally doing it for the life of AIM, which is 30 years. So we know a lot about AIM, but we have portfolios that invest right up the scale to AstraZeneca. Mm-hmm. So we're not shy talking about main list stocks as well, but AIM and small cap is definitely our speciality.
So from 3 million to about 300 billion.
Yeah, exactly.
It's quite a range, Freda.
Yeah. So I sit on the Africa working group with Ariel, and our leader of that group, Tracy, from the DBT.
Thank you, Tracy. And what a privilege it is to have Baba this morning, godfather of African PE, Freda. They say operators make the best investors, and it's great to have experienced entrepreneurs investing in public equities, and hopefully some of your companies in the future. And just to finish around, Neil Shah, I look after the tech sector here. I'm a recovering banker. I did that for about 15 years, been here for 5 years, and we see about 55 tech and tech-enabled companies IPO in London, still waiting for some African tech companies. We got very close with Azure Finance. Hopefully we'll see some more in the very near future. So, without further ado, let's talk about 2025. This was supposed to be the year when we got back to normal, the year when volatility ended. He's been following what's been happening in the States this week. It's good.
Wait, let me get my popcorn.
So, Ariel and I get to sit back and, we don't have to live through this. We're not making or losing money. Freda, what's it been like being an investor this week, this year?
This week, today. It's been really tough. I mean, as you said, we just thought the markets had found stability. The 2025 was the year that everything was going to recover. And actually, we had a great December. And it looked like the momentum was going to continue. Fortunately, there's someone called Donald Trump that is now leading the US. And that was January the 20th, and everything changed. So we had to deal with tariffs, which is... It was just mind-blowing what happened there. And a lot of companies, I have to say, were terrified but didn't understand how it was going to affect their revenues and profitability. And I think that's where a lot of the uncertainty came from, because a lot of companies just actually really don't know what's happening. Mm-hmm. And so anyone who had any exposure to the US in terms of their revenues and profits, their share prices were hit, which then sort of trickles down to the rest of the market. And on the small cap end, obviously, we always bear the brunt of market volatility. However, it has slightly recovered in the last few weeks. We had a really good May. I had a board meeting yesterday, and the board were actually smiling. I think they came to attack me, and I said, "Look at these share prices," and they're like, "Oh, thank God." But we had a great May, and the beginning of June has been great. So we're just hoping that if the macroeconomics obviously 100% on the US healthcare sector. It's a management sort of software solutions provider for a lot of clinics and hospitals. Right. There's definitely a focus on there. So Trump might be destroying a lot of things, but luckily not everything. Right. And it's a founder-led business still. We invested at much lower float. So it's actually in our tiny VCTs. I've got some stats here on Craneware. It floated in 2013. And what I wanted to talk about, so people know the size, because I think you need to be like 500 million market cap to float on. In London, you don't need to be. Floated in June 2013, raised about 11 million. The market cap was 36 million. Craneware has grown significantly over the period, and now the market cap 700 million. Thank you very much. Wow. So we invested at float, so we're quite happy. It had a potential bid, as you know, a couple of weeks ago, and I think something's going to happen. Hopefully there's a bidding war, and the 700 million actually ends up being $1 billion, but I think I'm being a bit too optimistic. So there are still great stories out there, and we're hanging on to hope.
Great. So that's Craneware. And you how are you feeling about new IPOs and the market? Are you looking at new deals?
Yeah, we're looking at new deals.
Are there any new deals?
There are some new deals, actually. We invested in...
It's a relief, because
yes.
I might get my P45 otherwise.
No,
so, okay.
I'll get my P45 first. No, we invested in RC4 which you know is an AIM IPO this year. We've seen about 2 early looks. And there's one...
Just to take a step back, so an early look is when a company comes around the London market and they just go around with a deck and stand up fund managers. Do I have an investable business?
Yeah. Yes. And so we see them, and then we sort of give them advice on the investment thesis. So we've got 2 in the diary next week. Right. Brokers are talking about a strong pipeline, but it's always the case that they're just waiting to see what happens in the market. So summer's usually a very quiet time, but their books are full. So if we can maintain sort of like a positive momentum during summer, I'm sure September there'll be quite a few deals coming through. But secondary fundraisings have maintained us over the last 3 years in a bear market, and there's still companies out there. I mean, we actively go to our existing holdings and say, do you need cash? So sometimes we create our own deal flow because we raise cash every year. So I'm sitting on a lot of cash I need to spend.
Great. So if you need cash, you know where to go, right? And let's do a bit of translation, right? Strong pipeline in understated British means really good. Ariel, how are you seeing life?
So we see things a little bit earlier too. So maybe I'll speak to that because Freda's spoken to the sort of market entry point. On the venture side, early stage fundraising, that's been very challenging. As I'm sure you all know, we're seeing fundraisers take much longer to achieve. We've seen companies that raised in the period of 2021, 20 really struggle to maintain those valuations and really push back on having to do down rounds. And so the private markets have come out to be quite challenging, actually, particularly in tech. But I think that's probably helpful for the public markets perspective, because the delta now between valuations you can achieve in the public markets and the private markets is really narrowed in the recent period, and also we've seen some companies sort of staying private for a little bit longer and looking for different ways to access that liquidity, and actually seeing sort of later stage private companies almost adopting public company sort of mechanics and doing sort of larger private placements and sort of in terms of replacement IPOs. But similarly to, and then I should say maybe on the seed and super early stuff, that's actually maintained and stayed quite busy. That's sort of seen as, well, we've got to spend some money. So that's kind of it, that sort of stayed, being deployed here.
What's the earliest stage company that you support?
We've got 10,000 emerging growth companies in our US portfolio and about 800 between the Cambridge and London portfolios here, based all over. So, hard to pick, but we've got companies that probably, we've just done seed fundraisings. I'm doing one called for Virtue Vets. Just comes to mind at the moment because I'm working on it at the moment. Is raising, £3 million, and we do others, that raise hundreds of millions. CMR Surgical, we've just recently done a raise for them. Matillion's one of our companies on the tech side as well. So we do a huge range within.
So if anyone's not got an AI lawyer, you can have a real one.
Yeah, and then on the M&A side, again, that's been challenging too. We've that's been impacted by market volatility. We've seen we did the Raven deal with WorldPay, so we've been able to kind of get a couple of more out on the fintech side. So fintech had been more challenging in recent times to do M&A, but we've been able to get a couple of those off the ground. And AI, anything with AI is that's where the action's happening. So, but other than that, it's also been muted on the M&A front. But to add to the whole IPO and public markets piece, but I think what Freda and I often speak to companies and tell them about, and investors into companies, that forget in a way what today's market looks like or share price looks like. Preparing for your exit, whatever it is, M&A or IPO, needs time, and so think about you don't wait for the market to open. Be open for you to start getting ready, because you won't make it in time and to jump into that particular window.
But let's talk about unlocking that market, right? That this was supposed to be the year of great recovery. What's it going to take? Ido here at TLCom always gets picked on every year, but he's got a lovely portfolio, and boy would I love to IPO some of his companies. Well, what's it going to take to convince Ido to say, Neil, here's a company to try, and not sell it to, I don't know, D-Local or someone.
So
he wants to start.
I'm looking at you, Ariel.
Okay. See, they always want me to go first. Okay. Let me say this. I think clearly more investor confidence in terms of just some stability. If I think of, I came to Goodwin to set up the capital markets practice about 3.5 years ago, and 2 weeks after Ukraine happened, and then SVB collapse, post-COVID supply chain constraints, inflation. We've had 4 prime ministers in this country. We've had a death of a monarch. We've had a change in administration both here and in the US, huge changes. So flare-ups in the Middle East, so there's been sort of significant interest rate hikes and inflation and all the rest of it in a very, very condensed period of time. And that's impacted tech in particular. So I think, a little bit of, can we get through a period of time without sort of a major market shock, I think would be helpful. A lot of that stuff's priced in. So I don't think people are waiting for the Ukraine war to end or the Middle East, to finish. But it's like to to just have a period of time where
Yeah.
investors can say, okay, we can kind of get back. And I actually think that's probably closer than we think, despite some of the sort of tariff turmoil of recent times. But and in the UK, I mean, there's a lot that's been happening actually in the background to try to unlock that, and we spoke about it, I think, a little bit in an earlier panel as well. But there's been significant regulatory reform here in the UK to make the listing regime here much more attractive. There's definitely been a recognition that, particularly when it comes to later stage funding, we want to unlock more capital here in the UK to be able to fund companies and enable them to feel that they can come to the UK, scale here, and stay here and access significant pools of capital, just as they think and can and want to do in, say, the US, for example. So I talk to companies a lot about the differences and the compare and contrast. So I know we'll get to that a little bit later, Neil. But I think, capitalizing on that, the pension reforms that are underway to unlock that liquidity is going to be really important. And I think those kind of changes, which are underway and are happening, will be really critical to unlocking the market.
Yeah.
You're going to have some competition, I think.
Yeah, I think. I mean, I agree with everything Ariel said. I think, sort of talking to other investors, I think we've contributed to the AIM consultation paper, and hopefully some AIM reforms will come from that. I think the market wants to rally behind AIM, particularly investors do, because we're invested in AIM. So if we see some of that come through, I think that would be great. The other thing is the pensions, so that unlocks £50 billion. And UK capital markets have seen outflows for 3 years, and I think we just need money to flow back in. That would actually change the game, and I think that will change investor sentiment. And because UK capital markets now, I mean, the valuations are the cheapest they've been for a very long time. I mean, the discounts we're calculating is, I mean, it's 40% compared to some of the other markets, and definitely the US. So if we can start to get some of that flows back in, then we can support our existing public companies. And I think that's the issue, is like, how do we support them? Because right now we feel it's almost like the Hunger Games, because the UK capital markets are so cheap. PE, particularly US PE, is this is a hunting ground, right. And the UK doesn't need to be seen as an incubator of tech. It has to, those tech companies have to stay here, and we have to grow them. So that needs to change. But I think the government is doing the right thing at the moment, and we just need to keep knocking on that door.
So to just give this a little bit of context, in 1997, 53% of UK pensions flowed into the stock market. Today it's about 3%. But the good news is that 5 years ago we didn't have a pension secretary. We've got a pension secretary. There's been a pensions review. There's been the Mansion House Compact and the Accords. And everyone's realised that actually these companies have been funded by overseas investors, could well be funded by UK pension funds. And I think if we even go from 3 to 4 to 5 to 6%, that starts making a material difference on valuations and demand for hopefully IPOs of your companies. And we'll touch on AIM as well. But Freda, just another question is, that we've got a lot of African companies here. Some may assume that you can't list here. How do they get access to your funds? What sort of structure do they need to be in? And we heard earlier today that you can make a 5x return in Egypt against massive currency valuations, devaluation. So clearly there must be some opportunities that could be relevant for Octopus.
No, absolutely. And the good thing is our funds are sector agnostic as well.
Yeah.
And they're region agnostic too. As long as you're on AIM, then it's a massive tick. I mean, we look at everything, and we've seen companies from different regions. You know Boku very well, that caters to different markets. So I think there's more of an understanding of Africa than there's ever been. I have to say, when I started in the market investing in AIM, it was just about mining and resource companies, and that's all they knew. They don't. I mean, now mentioning to my team, do you know the incredible tech companies in Africa? Of course they say yes, but then they're like, which ones, Freda? But we have to keep changing the narrative, but I think the doors are open to that. And brokers and nomads are willing to listen to those new stories and create those new narratives. And we just need to keep singing how wonderful Africa is and the ideas that are coming out of there.
Fantastic. We've got an AIM advisor set just up there, actually.
Oh, really?
Let's talk about AIM. So did anyone see the big screen in the square? Yes. On the way in? Okay, so that was AIM. Well, what is AIM? Who wants to take this question? Ariel?
I mean, it's Europe's biggest growth market.
Yeah.
It's a proper growth market. And if I can compare it to NASDAQ, if I can, which is the other growth market that I often get asked about and have to work through the pros and cons of with clients. NASDAQ's almost become a victim of its own success.
Yeah.
There are 3,500 companies listed on NASDAQ. Just to give you context, okay, I mean, to make a splash on NASDAQ, you've got to be pretty sizable. Mm-hmm. If you're $1 billion, you'll probably fall within, you're around 2,227th on NASDAQ. You tell me if you're going to get covered by any analysts and reap the benefits of actually having your story out there. People understand the problems that you're trying to solve, why your tech or or science, makes sense. But that 2,227th is 318th on the LSE, just to give you a different context. 5 billion company is 1,127th on NASDAQ. So even at 5 billion, you're not even in the top 1,000 companies. So it shows you that how big some of the companies are on NASDAQ. But at 5 billion, you're 120 on the LSE. That's a FTSE 250 company, which means you're open to a huge universe of investors. So I say that to say that to list on AIM, and Freda will be able to speak to this a little bit more, in terms of what the size is and looks like, you don't need to be a unicorn. In fact, most of the companies that are listed on AIM sit between about 25 million and 150 million pound market cap. There are companies that came to market with well under 170 million ARR. But the idea is that you are able to access the public markets at an earlier stage in your life cycle, provide that liquidity to investors, and be subject to less onerous, ongoing public company regime that enables growth companies to focus on growing and use public markets to fund that growth. And that's really what AIM is about. And if you look at it, collectively, it's about 54%, I think, of growth capital that's been raised across European exchanges has been raised on AIM. So it's a proper growth market in a way that actually that NASDAQ isn't.
Yeah, I have to agree with that. Most of our companies that go to NASDAQ die slowly after, so I wouldn't recommend it. But yeah, I mean, AIM, it's been going for 30 years. When I first started, AIM was seen as sort of the cowboy market, because and penny stock sort of market, and it's grown tremendously over the years. An incredible company started on AIM. I mean, ASOS is one of them. That was how big was it? 12 million market cap or something?
About 12 million, yeah.
I mean,
is there maybe a shop on ASOS here, or heard of ASOS?
Yeah, and just it was a space where entrepreneurs could come to sort of like start the next cycle of their growth journey. So although UK capital markets seen as an exit, really it's just a new season as I see it. So founder-led businesses are still going after many years. AIM has, as well as being this sort of growth market, the interesting thing is the investor base. And I think a lot of people don't understand that literally every investor can invest in AIM. I think there's only one fund, which is Baillie Gifford, which we don't need to take Baillie Gifford into any sort of account. But every fund invests in AIM. BlackRock funds do. Mm-hmm. I mean, we do.
And US investors can invest in AIM.
Yes, US investors can invest in AIM. Some of the biggest funds in this country can invest in AIM as well. And if you're going to make the returns, yes, it's the riskier end of the market, but if you want to make amazing returns, then really look to growth markets. I mean, I'm just going to talk about Keyword Studios because I know it's one of yours. It was in the video game sector. It floated in 2013. We invested at float 49 million market cap. It was taken out by private equity for 2.1 billion, and it stayed on AIM throughout its journey. It never went to the main list. Mm-hmm. So really, the AIM investors are the ones who benefited when Keywords was taken out.
Yeah, if you can make your investors money, they're going to be a lot more supportive along the way. And just to bring this home, right? So when Amazon went public it had $16 million of revenue, right? How big do you think NVIDIA was when it went public? Any guesses? 29 million of revenues, booking $35 million of revenue. If you look at the Bessemer do a cloud index, and the average software company probably has about $900 million of revenue today. And if you look at some of the IPOs, they're at 6, 7, 800 million of revenues. We've got a market that can generally work for smaller companies. Right? Just read out some numbers. Beeks, £4 million of revenue at IPO. That was a software business. Signed to stock exchanges. Blue Prism, the first kind of Gen 1 of AI repetitive process automation, 6 million of revenues. PensionBee in the fintech space, about $6.5 million of revenue. We had a company recently move up to the main market and into the FTSE 250, business called Alpha Group International. That's a fintech consultancy on one side and a proper fintech business on the other in payments. $8.5 million of revenue, 30 people in one office when it IPO'd. Today it's probably got about 480 people across 11 offices. And it's been a great success story. So you can absolutely start small and grow.
Absolutely. And it's also worth noting that there's a lot of patient capital on AIM, because I think if you're investing in a growth stock, you realise that it's a journey. So we're going on the journey with the company as well.
Why are you smiling at me when you say patient? Or are you thinking about some deals I've shown you?
Don't go there, Neil. So we've been invested in some of this stuff for like 20 years. And yes, they've made mistakes and then they raise money. But we're able to follow our money, and even when they grow with other funds that we have. So the funding continuum really exists even within our own sort of quota team at Octopus as well. And so we're able on the VCT side to recommend it to our colleagues that invest in much bigger AIM companies. And so, I mean, the patient capital is there. And once you understand a company and you're on that journey with them, you understand the story, you understand the market, the dynamics and everything else. AIM companies, particularly you saw it during COVID, where it was a really tough time for companies. They raised money there's a lot of money raised during COVID because they were publicly listed companies on AIM. We understood the growth story still. We're going through this together. You'll get through it. We wanted them to have healthy balance sheets during that period. And that's the beauty of being an AIM-listed company.
And so you've got a multi-stage public fund. What do you give them in addition to capital? Other than a hard time when they come in twice a year.
We give them a really hard time. I actually got a complaint from a broker a few months ago saying, Freda, the company is really upset with how you talk to them. And all I did was just ask them about
the KPIs.
Exactly, which I couldn't answer, so I just gave them a really hard time. But we're not like private equity where you sit on the board and you're basically hand-holding companies throughout the journey. We don't have that amount of time. I've got 87 companies in the portfolio. There are only 24 hours in the day. I can't do that. But we do create relationships with the management team and sometimes with the board. So we definitely opine on the investment thesis, even as they grow. Some companies come to us if they're thinking of doing an acquisition and they want to raise money. Is that possible with the market like this? So we give them that advice as well. We recommend board members, or we actually even help brokers sort of like, we're not a recruitment company, but we help them even do the spec for what kind of board members would actually be interesting to the market and the company, of course. We go and see them site visits, so we get to know the key management team below the executive team. So it's a journey, I have to say, it's a journey, but we also understand that it's a relationship we're building too.
Good stuff. And you spoke about Craneware. Any other good students or bad students?
Oh, I've got too many bad students. I wouldn't even know where to start. But
what are you looking for when it comes to a management team?
A management team, I guess it's a passion for the business. And the passion you can see within the vision, what their strategy and vision is as well. We like to know that there's another layer below them as the business grows, so there's no issues of key man risk. Because sometimes I remember back in the day, I've forgotten which company it was, and it was a founder-led business, and he died in a helicopter accident, and the shares literally went down like 95% because everyone knew it it was only him that was running that business. So we like to know that there's another layer. Obviously, the CFO has to be very strong. And I think people usually, some companies, when they're naive, like to promote the financial controller, but actually a CFO does a lot more than that. They have to be strategic, because you might have the CEO that wants to go out and buy and build everything, but the CFO should be able to rein him back and say, oh, listen, let's take it easy, because market has expectations out there. We never want to control everything they do, but they have to understand that now, we're moving this path together. The board is very important. We always try and meet the chair as well, because there's nothing worse than an echo chamber with the management team and the board. So it's a good vision, good strategy, understanding their markets. And also the risks within the markets as well. There's nothing worse than someone coming and saying, "Oh, I didn't anticipate that, that supply issue." You should know how your industry and business works. So demonstrating that and being able to tell the story, because we need to understand the investment thesis. So as long as companies can tell the story that gets us excited about being investors for a long period of time, then we sign checks.
Do you hear that? Ariel, following on from this, how do we get companies ready before they go and see Freda?
Those of you who maybe came to our session earlier today, we touched on exits. We touched on that a little bit, but maybe what I can focus on here for the purpose of this discussion is, what you should think about when you're considering your destination, where you want to end up potentially accessing the public markets. And I think one of the reasons why we wanted to highlight AIM as a good potential and put it on the minds of every single person in this room, be you a founder or an investor, is that it is much more accessible than people think, and public markets should be in your mind as a way to access capital, access liquidity, at an earlier stage in the life cycle than maybe people sort of common perceptions have, because you could do it on AIM earlier and much more easily and cheaper than pretty much any other market that has this, with deep liquidity and people who write, like Freda, who write checks. And so one of the questions I, tend to often have to navigate is, okay, well, I've got companies, because I focus on tech and do a lot of biotech and life sciences work as well, is, well, we want to go to the US. So, why should we consider London over the US? And if you're, as I said, if you're a sub 2 billion, I probably press, you wouldn't think that, which is really unfortunate. And I struggle with that a little bit, and maybe I can say that as an American who's lived here for 25 years, that I'd love to see, and I think I said this in my earlier panel as well, that our press be more. We talk about the positive stories, the good stories. We seem to not do that here in the UK as much, and I'd love to see us channel our inner Americans a little bit, and back our ecosystem. Or Africans as well, African Americans. That's me. Because there's actually some really good stories here, and good. And in fact, where's the? If I look at the UK cohort, for example, that's gone to the US, out of the if you those companies that have raised over $100 million at the time of their IPO. So just looking at some of the bigger transactions, for example, there's only 20 UK companies that have gone to the US and listed there. And most of them have been biotechs. Most of them my firm has taken there, so I can be careful what I say about my own clients. But only four of those 20 are trading up. 9 have delisted. I've done a number of those, and the remaining 7, and my stats are as of February, which are from you guys. They're trading an average of 84% down. where's the positive case study that the
Yeah.
press is looking at that makes this mass exodus to the US and you perform better? Why is Jamaica doing really well in New York? There's a difference. There's five African companies listed in New York compared to over 100 here in London. But yet you read the press or you read the headlines and you wouldn't really understand that narrative. So I think what we were trying to do, particularly with this panel, is open people's minds in the conversation around accessing a proper growth market, thinking about the public markets as part of your exit strategy, your liquidity strategy, and funding your growth strategy. And you can do that on a market like AIM, which is also very international, has people with big checks, and is very welcoming to the African narrative.
Great. Thank you, Ariel. Freda. We've got about 8 minutes left. Let's open up for questions. Who wants to go first?
Fantastic job, ladies. I think you guys did a really great job. But could we double down on what the AIM has to offer for African businesses? I know you spoke a bit earlier on, but that was to do with the main one. And from the point of view of what sort of valuations, what should these African companies, the size of these African companies, is a $50 million or $100 million company valuation, for example. Should they consider the AIM? Also, the fact that the company makes most of its revenue in Africa, it's not a British-grown company. What does that mean for a number of these companies? Should we start considering from Series C, Series B, how early or how late in the process should these companies, just that sort of thing?
There's three or four questions there.
Yeah. Do you want to start with how early?
How early? Look, I would love to work with the earlier you start thinking about your exit strategy, the better. And I say that for investors as much as for founders. To be ready, to transition to a public company takes time. What I want to see is that you choose the right market for you, and you thrive when you get there. And I think it takes at least 18 to 24 months to really think about preparing for that. You can execute an IPO on AIM in 2 to 3 months. It's quick. It's quicker than the private markets. But to be really ready to be a public company, you need to start thinking about your corporate governance frameworks. You need to think about what your board looks like. You need to educate your management team. You need to think about, who your CFO is going to be. Does that person have PLC experience or you listed company experience on your board? You need to be building relationships. Okay, well, what's going to be your equity story? What's going to be your what you want to look like at the time you access the public markets? And then let's reverse engineer to work out what needs to be done, or the milestones that need to be hit to get you there.
Yeah.
And invariably, you'll see it'll take a little bit of time. And whether you access the public markets in the end or you end up selling or whatever, most of that work is relevant anyway.
Right. And Freda, in terms of size?
Gosh, I've invested in anything from 5 million market cap to much larger. I mean,
is the bar higher in Africa?
Yes, the bar, of course. I mean, anything that's not UK, because there's a natural understanding, because we read the papers, see the news. So UK companies, you understand them because you probably use them at some point or another. It's just, so definitely the bar is higher, but I would say for anything that's not UK, I wouldn't say it's an Africa thing. What people do understand, because there's bad stories in the papers, but the good growth sort of like narratives, as in macroeconomic growth, a lot of it's Africa comes in there. If you look at the top economies growing, Africa is sort of like, is always half, if not more, of that list. So people understand that there's Africa has good growth. It's just making them understand the growth of your particular business and sector and how that looks and feels. And also, as I mentioned before, making them understand some of the key risks. And if it's currency, it's currency. If it's a political risk, it's a political risk. things do happen. So as long as your investors are not surprised when something happens, I think it's fine. So it's really crafting that investment thesis and letting people understand.
If you list in New York and you don't generate most of your revenue there, you are a minority. Whereas the majority of companies that are listed here generate their revenue outside the UK. So the investment community here, yes, okay, we'll look at where you come from and try to understand sort of local challenges and all the rest of it and risks. But the investor community here is much more well versed in investing in companies that operate outside the United Kingdom.
No, absolutely. And also, I think the other important thing is, and I said it before, is about patient capital. And I think that's important. So imagine as a smaller company, if you understand that there's patient capital available on AIM, available in the UK, that's what you need. You need investors that want to go on that journey with you and understand your business and the dynamics of whatever is going on within your sector or country more, but they're willing to go on that journey with you. They're not trading in and out of these stories because you messed up once. They'll be like, okay, that's really bad, we've lost money, but what does the future look like to you? And they're those kinds of investors on AIM. I mean, we're just in the process of working with the government to change some of the AIM VCT rules, and the government are willing to listen to that. I mean, just tweaking some of the rules, and I won't go into how complex VCTs are, but things like the gross assets test and investment limit. Currently, we have investment limits of 20 million, and AIM is very interested in tech. AIM is very tech focused as well. That's sort of our audience who understand that.
And if you unlock that, how much capital does that bring into?
Sorry?
How much additional capital could these rule changes bring in?
Well, these rule changes will actually expand the deal pipeline by 15 times. So it will be able for us to be invested in more companies. Right. And that's what we're hoping for, is that the pipeline increases. Because as AIM VCTs, we're raising money, all of us, there are only like 6 strong of us, but we're raising money consistently every year, despite the fact that there's been years of outflow in UK small cap at the lower end, and we invest in very small companies. Right. We've been consistently raising money every year. So we want to actually increase the number of companies that we can invest in, which means we can go out and raise more money.
I can attest to that, because Freda's been calling me for the last 3 years saying, Neil, where are the IPOs?
Where are the IPOs?
Well, I'm going to try and squeeze a couple more questions, but Ariel, 10 seconds from you. How do we get rid of the Africa discount for some companies that are coming here?
I'm so glad, because I just wanted to jump. I'm so glad you asked me that question, because that was exactly what I was going to jump in to try to answer. So the Africa discount, and I hate to say it, but let's just talk about it, right? And it's not like it's just in the UK. You'll get it in the US as well. But how do you hedge against that? You hedge against that because I think corporate governance plays a big role, and risk management plays an even bigger role. And that's where, if you go back to your point about when to prepare even earlier. Right? Build that track record where you've got corporate governance frameworks in place, you've got policies and procedures in place, you've got committees of your boards, you look at everything and put that in place early, and almost start living and life like your listed company earlier. So you've got this track record, so by the time you're speaking to investors at the time of your roadshow, you're focusing on your equity story and you're not being distracted by any governance questions or perceptions, right? Similarly with risk factors, the way I work with companies, for example, I actually draft the risk factors that we would have in the prospectus almost earlier, 24 months out, if I could, because I want to understand what the risks are for the business. We go through an exercise of understanding who your stakeholders are, what are the externalities to your business, what are the risks to your business, is currency a risk for it, and then we reverse engineer to think about, okay, well, what are the ways we hedge against those risks? So again, by the time you're on the roadshow to talk to investors, we're not being distracted by the risks to the business. We're focusing on talking about your equity story and the positive news. So there's ways about it, and I think, apart from the fact that it's an extremely exciting time in the UK because of all the capital that the government's trying to do to unlock, to go into tech, I think tech can really, and I'm so excited for the continent because of in this vertical in particular, the sector in particular, because I think tech can level the playing field once and for all in Africa. A SaaS model that's built in Lagos is understood by someone who does, is the same as a SaaS model that's been built in Silicon Valley.
Yes.
And people can value that because they understand it.
Yeah.
And whether it solves an African problem versus, one that's in the US doesn't matter. The tech is understood. Yeah. So I think now is a really, really, really exciting time to be in this sector, and I think it's a really important time to be thinking about the public markets and AIM in particular for accessing capital.
I'm seeing a big timeout sign there. Okay. Can we take one more question?
Yeah.
Yeah. Okay, we've got time.
Hi. Thank you for a very insightful fireside chat. Question on particulars of listing in AIM a little bit. For a lot of African businesses operating on the continent, it's quite common to have an OpCo or multiple OpCos in Africa with a HoldCo somewhere outside the continent, Delaware, UK, somewhere else. How vital is it to have a UK HoldCo to list on AIM? Is that something you would be telling your clients to work on in their 24-month plan?
You're going to hear slightly two different answers, and I'll explain why. So technically, you do not need to have a UK company to list here. Absolutely not. No. Is it more helpful sometimes? Yes. Do I?
That was an emphatic yes.
I have a number of clients who are listed on AIM and the main market who are Delaware topcos. It is more complicated because you're dealing with two jurisdictions. Yeah. It is, and you will have to pay me more. I'm totally fine and happy with that. But if you want to simplify your life, probably go for a UK topco in the first instance. And again, if you have no plans to expand into the US, if you have no plans to generate revenue into the US, and if the most of your cap table is going to be in Europe and EMEA, please don't go for it.
Don't do it,
And then there's a VCT angle as well.
Yes, you have to have a registered business in
which could be a subsidiary, but it's helpful to have the topco.
Because some people think as well, I have to register in the UK. Do I have to have employees here? Mm-hmm. Do some of my revenues have to be generated here? Absolutely not. So you don't need that.
We know some creative accountants.
We definitely do. But what looks good to UK investors is if you've got a board of say 4 or 5 people, at least one of them is based in the UK. If you really want UK investors. So, and the reason for that is that we can access them easier. We don't want to be calling the chairman and he's flying all the way from, I don't know, Cape Town. Lovely place to fly from.
Easier to get to than Dar es Salaam.
Yes, yes. But we don't want that. We'd rather have someone who we can call and have a conversation with as well.
Yeah, this is a trust business, right? And the easier you can make it, the more simple the story, the more investors that you can potentially crowd in.
There's also tax benefits as well. Again, get some good advice around it. Really, I think there's there's SEIS, EIS, tax relief here that is quite unique. You lose that, for example, if you list on or if you incorporate a Delaware topco or you do a flip to a Delaware topco, which again you can pay me lots of money to do. I'm more than happy to do that. We generate a lot of revenue as a firm doing that. But it's once you go to a Delaware topco, if you're a UK company, you cannot flip back. It makes absolutely no sense from a tax perspective. And then what costs so much money is trying to mirror the sort of tax benefit structure if you had a UK topco into the US entity is really complicated. There's an unhelpful narrative that you need to be a Delaware topco to access US investors. It is absolutely wrong. US investors invest into UK companies all the time. Often what we do in terms of structuring is if we have UK topcos, we'll have like a US sub. So US investors, if they want to invest into a sub, they'll do it on a subsidiary level, but you don't have to change your topco. So just get good advice about it and think about it early.
And if you want more free advice, Ariel's drinks on
Not
her
free.
terrace. No, tonight is free. Tonight is free.
Finished about 40
then it's up
seconds.
6-minute increments thereafter.
The drinks, yes.
Drinks are free, advice is not.
The drinks are free. I'll give some free advice over drinks, don't worry. But as of tomorrow, it's chargeable.
Any last... Oh, there's 2 questions at the back. Oh, one. Yeah, go for it.
Wait.
Okay. Let's make Andrew run.
Long legs.
He's the host.
Hello, sir.
Thank you for the great comments. Quick question on this last topic. So a lot of the Africa-focused businesses that end up having Delaware topcos do that before ever considering a listing.
Yes.
Because while it's true that U.S. investors might invest in U.K. companies, they are less comfortable typically with African jurisdictions. So if you find yourself in that place and you've now done that, what's the path towards? Because ultimately, I think we all know that London is probably, the London bourse probably has more appetite for African
100%.
entities than the New York bourse does, right? So how do you kind of circle that square? Or how do you advise people to circle that square?
My email address is a-white-Tsimikalis@goodwinlaw.com.
Okay.
Send me an email and we'll fix the problem.
I was just pointing to make sure that we capture Franklin's comments. But I think the point I wanted to just follow on is there are a few ex-founders, maybe second founders in the room that are perhaps about to start. What is the advice to them? I mean, starting point. I know they probably come to you.
No, my
in
advice
terms of
is to
incorporation.
get to, it's actually a really important thing to think about. So rather than just do what people talk about in founders communities, because everybody else has incorporated a Delaware topco, you go ahead and do that too. Just get some advice and really think about it, because actually it plays a role. It not only at where you exit, but also your funding rounds. I've had actually just recently a Series A we were trying to do where it was a Delaware topco, but the French investor didn't want to have anything to do with Delaware, didn't want to have to pay US legal fees, and we looked into unraveling the Delaware topco to try to create a French entity or a different type of entity or UK entity that the French investor would want to invest in. So it plays a role in your private financings as well. So don't just run out to incorporate it. And also the rules in Delaware just changed as well. So it's still a very favorable jurisdiction for corporate entities. I'm not going to say it's not, but it's moving a little bit away from that. And in fact, there's an open debate in the US as well about whether Delaware is still the best jurisdiction to incorporate companies in. So get some legal advice. I know founders and startups don't want to pay for that. That's fine. We have very flexible payment models. So and topic that requires a lot of thought.
Thank you very much, Ariel and Freda. Thank you, audience.